Good morning, dear students. Today we are going to discuss income from salary. What is salary? Where there is a payer and payee relationship, the amount paid by the payer to the payee is known as salary. The salary can be more than from one sources. Foregoing salary is a salary income. The tax-free salary should be include tax paid by the employee. Basic of charges. Salary is chargeable to tax when it is due to be paid, whether it is paid or not. Salary is chargeable to tax when any amount is paid, whether it is due or not. Arrear in salary to the employee is chargeable to tax. Chart showing a computation of income from salary. What are the things which are covered under the salary? Salary includes salary oblique wages, advance salary, dearness pay, dearness allowance, bonus, fees, commission, perquisites in lieu of or in addition to salary or wages, amount received in respect of encashment of earned leave, salary due services, contribution to the employers in RPF in excess of 12% of salary, interest on RPF exceeding of 9.5%. On the retirement of the employee, additional things provided by unrecognized provident fund, share of the employer, interest on shares of the employer, which covers taxable part of the gratuity, taxable part of the encashment of earned leave, if retrenchment, taxable part of the retrenchment compensation. In case of voluntary retirement, taxable part of the voluntary retirement compensation. Pension. At the time of retirement, an assessee gets the amount of money at the time of retirement is known as pension. Taxable part of the committed pension. Pension from the date of retirement till the end of the previous year. There are two types of pension. One is known as committed pension and another is uncommitted pension. Committed pension means when you can pay a return a lump sum amount of or a certain portion of your pension return back to the employer, and employer pays you lump sum money is known as committed pension, and when you do not return any amount of pension to the employer, it is known as uncommuted pension. Commuted pension is a tax-free, and whereas uncommuted pension is always taxable in the hands of the SEC, and it is taxable whether for all the classes of the employee, whether it is a government employee, central government or state government, or it is a private employee. Gross salary income less and entertainment allowances, maximum rupees 5,000, professional tax equals to salary. HRA, House Rent Allowance. The list of the following is exempted from tax. 50% of the salary where the SEC lives in Mumbai, Delhi, Chennai, Calcutta, and 40% in other cases. Actual HRA received or actual house rent allowance received. Excess of rent paid over 10% of salary. Exempted amount, least of the above will be exempted from tax. Taxable amount equals to actual HRA received minus exempted amount. Salary for the calculation of HRA means basic salary, commission if payable on the fixed percentage of sales, and dearness allowance if it is forming the part of the retirement benefit. Allowances. Conveyance allowance exempted up to 800 rupees per month if used for traveling between home to workplace. Medical expenses exempted when it is reimbursed or of the actual expenses up to 15,000. Beyond this is taxable in the hands of the SEC. Fixed medical allowance is taxable. City compensatory allowance in all the cases is taxable in the hands of the employee. These are the basic allowances which are given to each and every classes of the employee. Whereas there are certain amounts which are known as perquisites,